From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for October 3rd, 2016. I hope you had a great weekend and are ready to get started trading this week. In today's video, of course, I'm going to do a general overview of each of the U.S. currency pairs in anticipation of this week's trading, and I'm going to highlight some of the key levels that we will look for entry and exit opportunities. Now, as typical, we have a fairly light news calendar for Monday during the U.S. trading session, but there is some potential high-impact news out of Australia in the U.S. overnight hours that you will want to make note of, and you will want to be sure to check your financial calendars for these latest releases. Okay, let's get started here on the USDCHF dollar franc here. Over the long term, of course, we have seen a range develop inside the larger black box where the black and the blue trend lines go top to bottom of the larger black box. Most interesting over the past several weeks, 3 or 4 weeks, we've been in a period of congestion over here on the right hand side in the middle of the larger range. Let's go ahead and zoom it in here on the daily time frame, and we're getting into this area down here where we see a couple of weeks ago it bounced around between the yellow and the green zone, and over the last week and a half or so we've been bouncing between the blue and the yellow zone. Not too hard to see. Even last week's volatility, Thursday and Friday of last week, hitting the blue zone, bouncing back up to the yellow zone, coming back into the yellow zone. So again, quite a bit volatility, but it's just been stuck in a period of congestion and consolidation. So we want to make note of that. Potential trades inside of there, but at some point in time, it's going to break out of that congestion. It's either going to break to the top side and go up, or it's going to break to the bottom side and go down. Well, our most recent direction that the currency pair went in was from the blue zone to the yellow zone. So it was bullish on Friday. Went from the blue zone to the yellow zone, tried to break above it, couldn't, got back into it. So I think that's what we're waiting on this week. Let's zoom it in one more time. I think this week we're waiting for a breakout above the yellow shaded area. That's 97.35, by the way, at the top of that yellow shaded area. Above 97.35, of course, we do come in contact with the 100 period simple moving average, but I think if we can satisfy a breakout above this yellow zone, which is, of course, our resistance zone, we will likely look for the beginning phases of a push higher towards the 9800 level, which is the green shaded area, as our next resistance right here. It's not too hard to see. That's what happened here. So above the yellow zone, we go to the green zone. If it can break the green zone, we'll go higher, but right now the green zone is our first area of resistance that we'll come in contact with. If it can't do that and the market goes bearish again here on the dollar franc, bearish on the dollar, bullish on the franc, that would send us back down towards the blue zone, which of course is our current support, and anytime it breaks out underneath there, we would look for it to go lower. So right now we're stuck in congestion and we need a significant breakout. Could we get some news today here on the Monday that will change this? I don't know. ISM Manufacturing at 10 a.m. maybe becomes an opportunity for this to break out, but I think, especially if it's not great news for U.S., we just look for it to turn around and go back down. I think maybe the key player for this currency pair and many of the U.S. currency pairs as we go through this week will be the non-farm payrolls that we have to wait for until Friday. You know, we come up all the way into Friday of this week as NFP, and so could it stay between here till Friday? Not sure. It could. So we'll keep an eye on that. But breakout will be our opportunities here for the dollar franc. Taking it over here to the euro dollar, similar situation we've seen over the past couple of weeks. Period of congestion. No significant trend here. We've seen it go up. We've seen it go down inside the blue box on the right hand side of the chart. Currently over the past 1, 2, 3, 4, 5, 6, 7 days, maybe 8 days, 7 or 8 days, a week or so, we've been stuck between the orange and the yellow shaded area. Let's go ahead and zoom it in one time. Look at that, stuck between here. It's not anything new. We've seen it do that before over here on the left hand side. So at this point, resistance is the orange zone. Not too hard to see that. 112.60, 112.80 is the orange zone. Support is the yellow zone. That's pretty close to where we are. 112.20, 11200 is the yellow zone. At some point, we'll look for a breakout. If it's going to go euro long, dollar short, if that's the case, we would look for it to break higher and head on back up towards the blue zone at the top of the chart. Otherwise, if we get some strength for the US dollar again, maybe a push below the yellow shaded area, and we look for it to go lower. Again, I think it's a good possibility that we don't see a significant movement here on this currency pair outside of the congestion zone until we get into Friday's NFP. Now, I could be wrong. We could see some movement before there, but definitely something that you'll want to make note of is that right now we're stuck inside this period of congestion. It needs a breakout before we can really have any sense of a trend here on the euro dollar. I would say, at least for the day today, though, you're concentrating on the support above 1200. As long as it stays above there, the potential of it rallying back towards the orange zone, I think is pretty high for the day today. Take it on over here to the GBPUSD. We have had some news out of the UK earlier today already for the UK. We had manufacturing PMI came out positive, by the way, for the UK. A little bit above the forecast. The forecast was 52.1, came out 55.4. That's good news. However, we don't see that reflected in the price action. The market is still pressuring lower in the direction of our most recent trend here for the pound dollar. So positive news not reflected here. That's interesting. We do have some, low to medium impact. Again, we have the ISM manufacturing PMI coming out for the U.S. coming up at 10 a.m. If it's positive, of course, this would continue to pressure lower. I think it's very difficult at this point to sell it, though, because of the history of this price level. Let's zoom it in one time, and then I'm going to scroll the chart back just a touch like this. Take a look at the two blue boxes on the left-hand side. We've seen it challenge 28.75 before. That's the bottom of the yellow shaded area, the bottom of the chart. The two blue boxes show us. We've seen it challenge this. It hasn't broken it before, so we want to be fairly cautious right now. Is this a real deal breakout? Is it a false breakout? It's a little bit difficult to tell at the current moment. We haven't seen an open and close underneath the 28.75 level or so, so I need to be a little cautious. I don't want to suggest selling it until we either get some significantly positive news for the U.S., significantly negative for the pound, or it finally opens and closes underneath this yellow zone, which is 28.75, 2900. So we needed to get under and stay underneath there. Even if we go down here to the 4-hour time frame, get it back over to our current, you can see no open and close here, even on the 4-hour time frame. So again, I need to be fairly cautious here. I don't want to suggest to sell at the very bottom of the trend, buy low, sell high. I don't want to suggest to sell at the bottom until we see evidence of a real breakout rather than a false breakout for the pound dollar. Moving on to the USDCAD. Again, most of these U.S. currency pairs have been in congestion for a while now. We need some sort of catalyst to break them out. Here on the dollar CAD, no different. We see the long-term downtrend, the red trend line, the box, the big black box and range that this currency pair has been in. Let's zoom it in on the top right-hand corner of that black box, and you can see the blue box here at the top. And look at the extreme volatility we've seen on this pair from the green shaded area into the 1.3200s, mid 3200s, all the way down into the pink shaded area, the 1.3000 level. So there's been about a 250, 260 point range between the top and the bottom of that blue box that we've seen this waffling between over the past couple of weeks. Nothing really new, except for the fact that I would say that the closer it gets to the pink shaded area, you're coming into a more clear, low-risk, high-reward buy scenario. Just look at what happened the last time it was here. It found a significant support, went all the way up to the green zone, 250-plus pips. So again, I think if you're looking to buy it, you want to buy it as close as possible. 100 period moving average, 3,000 price level, pink shaded area. And then look for the rally higher. Watch oil. Oil, of course, last week took a little bit of a run higher. So if oil continues to go higher, breaking resistance and going higher, then we could look for that push all the way down to the pink zone or lower. We do have Canadian employment data as well on Friday. That could be a high-impact piece of news coming up for Canada later this week. So definitely some things to watch for. Watch for oil going higher, sends this lower. If oil suddenly retreats and goes back down, definitely watching for some support and some reversal here for this currency pair, maybe even from the yellow zone right now, heading back to the orange or the green zone at the top. Zoom it down to the 4-hour time frame. Take a look at that yellow shaded area, I would say. It needs to break through 1.3080. We're challenging that right now, but hasn't broken through it. I think we need a break of 1.3080 if we're going to see it back down to the pink shaded area today. Just be cautious. We are approaching the bottom of our range right now for the US CAD. Moving on to the US yen, probably very important to remind you about the long-term trend line, the blue trend line here. We have been in a downtrend for a long time. We've challenged it over the past couple of weeks, but we are still well within the parameters of a downtrend. Take a look, zoom it in here on the daily. Look at along the blue trend line, how many times we've come in contact with that blue trend line, even over the past 3 days, today and Thursday and Friday, challenging that pink zone. I think this is a terrible place to go long, by the way, into the trend line, into the pink shaded area. Look back here where the blue circle is, support back here, and helping us identify this as resistance. Obviously, the pink shaded area is resistance for the past 2 days and now today. Don't go long right now. The only reasons to go long on any currency pair really is a dip to support, which at least at this point is the blue zone 100.95 down closer to 101, or it breaks through the pink zone. I don't think buying it under the pink zone right now is a very good idea given the price action we've seen here. Take it down to the 4-hour time frame. Again, buying right now just doesn't seem like a logical trading scenario. Common sense, folks. We don't have to get too hard to see that it's been resistance here. So it would need to break out above there if we were going to look for a buy. That's 101.75 at the top of the pink shaded area. So that's really what I would be watching for today. A breakout above the pink zone becomes the long scenario. I don't see any indication or price action that tells me to sell this either, but at least right now it's not a great opportunity to go long on the US yen. Let's take it on over here to the AUDUSD. Of course, I need to remind you of the long-term trend again, the red trend line. Why is that important? Zoom it way in here on the weekly time frame. Take a look at what's happened over the past month or so. Resistance, reversal, resistance, reversal, resistance, holding. Interesting today is that we're just above that on the open of this week's candle. We haven't actually seen the market open above that long-term weekly trend line at all over the past couple of weeks. So this is interesting that it's the first candle to open. It could be the false move. We could look for this to turn right back around and go back down. You know, if we get some positive NFP numbers at the end of this week, this turns around and likely and starts to go back down a little bit. So be careful, be watchful for that, but definitely interesting that we've seen the weekly candle now open above that long-term trend line. Take it down to the daily time frame. We've been toying around with that trend line for a couple of days now. Look at that fall. The red candle here went down to the purple zone, even touched all the way down to the pink zone. Now we've seen reversal back to the blue shaded area. The blue shaded area, very interesting. We've seen a lot of resistance, congestion along that blue zone. That is 76.75, 76.90 is the blue shaded area. Again, very much like the yen that I mentioned on the yen. Take a look over the past few days, and even back here where the black circle is, this is resistance. And it's difficult for me to suggest buying into resistance because, you know, if we would have bought it at any time over the past week or so, it would have been very terrible for us because it would turn around and went back down to the pink zone. So again, buying into resistance, not really the strategy that I would employ. If you're looking to buy the currency pair, you either want it to go down into support, which is the purple shaded area at this point, or break through that resistance. That's the only reasons to buy this. Down into support or break through resistance. Otherwise, we're watching for evidence of reversal from the blue shaded area, 76.75, 76.90, and the possibility of heading down to the purple zone, or a breakdown of that and some dollar strength sends us back lower. Keep in mind, we do have significant Australian news coming up later today. Overnight hours really for the U.S. We're starting at 8:30 p.m. Eastern U.S. time with some building data for Australia, and then we get into 9:30 p.m. Actually, that's not it. The 11:30 p.m. Eastern U.S. time. Interest rate news out of Australia, RBA rate statement. So in the overnight hours, Asian session overnight hours for the U.S., we have some data out of Australia that could change everything that we're talking about here for the Australian dollar. So keep that in mind. We're in congestion, purple and blue shaded area. Take 1, 2, 3, 4, 5 days bouncing around in here. I think we need a breakout above or below it to give us a consistent direction for the Australian dollar. And lastly, over to the NZDUSD. We've been studying this for several days now. Nothing really new happening here. The rising red trend line, we broke underneath there. The falling blue trend line, we've been underneath there. We've seen this black rectangle here, resistance into the pink zone, support into the green zone. Zoom it in one time. There it is. Look at the red circles, the blue circles. We've seen consistent market behavior. At some point, it's going to break out of this cycle, this pattern that we've been in here for the New Zealand dollar. Right now, it's just holding right underneath that blue trend line. 1, 2, 3, 4, 5 days now. Holding underneath the orange zone, the blue trend line, falling blue trend line. One of two things needs to happen. It either breaks the blue trend line, the orange shaded area, to go higher, challenging the top of the range where we see the blue circles, the pink shaded area, and eventually a breakout above that, Or the next thing we're looking for is continued resistance into the blue trend line, orange shaded area, which is 72.80, 72.95. A challenge back to support, which of course is the green shaded area. Look at the red circles back here. And eventually a breakout under the green shaded area, turn lower for the New Zealand dollar. But until then, we're just bouncing around in here. Take a look down here to the 4-hour time frame. Look at the past couple of days here. You know, we're looking back into late last week. Look at a market bouncing around between the green and the orange zone. Even today, hitting the orange zone, hitting the blue trend line, and now falling off of it. If you're going to go short at the orange zone. If you're looking to go long, it needs to be at the green zone or above the orange zone for the New Zealand dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.